what's in pipe, what do you need to hit plan, what's the path to the math. Now, I've been teaching this class for probably 4 years. Some of my hardest questions historically would have like a 15 to 20% solve rate of people in the class. And recently I noticed that maybe like 65, 70% of the class was getting it correct. And I realized they were just putting it into ChatGPT, right? And they're asking the question of like, if these were my historical numbers and this is what I need to go do. So yes, there's like tooling, and to be scaled, like you need to have these systems in place.
Welcome to Speaking C-Suite, where today's CFOs have evolved from financial gatekeepers to strategic force multipliers, and they're driving growth across the entire organization. I'm David Hemingway. I'm host of the Angel Nest podcast, and I'm joined by Johnny Walker from Ruled. Johnny and Ruled are the driving force behind this series. Modern finance leaders aren't just managing numbers. They're using data as a strategic lever for real-time visibility and smarter decision-making. Speaking C-Suite dives into those high-stakes conversations between the CFOs and other key executives at scaling companies. We're starting with Cassie Young. Cassie's a general partner at Primary Venture Partners, a $1 billion plus assets under management early-stage VC firm in New York. Cassie leads B2B software investments and manages the firm's 25-person portfolio impact team. It's the largest of any seed fund. She previously ran a $200+ million global business as Chief Customer and Commercial Officer at Marigold and was CRO at Sailthru. Also a Duke grad and a die-hard fan, Cassie sits on Duke's Innovation and Entrepreneurship Board. She brings that rare perspective of having operated at scale before moving into venture. Cassie, welcome to Speaking C-Suite.
Thanks for having me. Excited to be here.
Thank you very much, Cassie. We're really looking forward to this, especially as our inaugural episode. Just a couple of quick things before we start. I just want to give a huge shout out to our three founding sponsors, as they've really helped make this podcast happen. Aleph, the AI native FP&A platform that's transforming how finance teams work with real-time data. Rillet, the AI native ERP that's helping companies close their books in hours instead of weeks. And Tabs, the AI-powered revenue automation platform that integrates contracts, billing, receivables, and revenue recognition. These companies, these top-notch companies, are exactly what we're talking about today. AI-centric finance technology that's enabling CFOs to be strategic force multipliers rather than just number crunchers. So thank you to those three companies. Really pleased to have their support.
Great.
And I'm thrilled to have a primary portfolio company in that mix with Tabs.
Yeah, very much so. We think the team there is amazing and thrilled to be a partner with them too.
Yeah. So Cassie, your path from finance into marketing and revenue leadership has really given you a very unique perspective on how these functions need to work together. So let's start there. You've identified P&L Fluency as an essential skill that's often missing in the C-suite. Can you explain what that really means and why it's so critical for any leader?
Absolutely. And maybe to walk that back, you sort of hit on the fact that prior to coming to the venture capital world 5.5 years ago, I spent a number of years on the operating side. And I held a number of different roles across marketing and sales and customer success and really the whole gamut. And looking back, what I frequently tell people is I was never the best marketer. I was never the best sales leader. I was probably never the best CSM team leader. But what I think I'm really, really quite good at is being an amazing general manager. And the reason I share that with you is because when I really unpack the skills that I think make for an effective general manager, I think a lot of it comes back to, the ability to break down silos and work across teams. But a huge piece of it is that connection to the company's P&L and financial statements. And so when I talk about P&L fluency, really what I mean by it is the ability to tie the work that you are doing directly into the top and bottom lines of the company. So you really understand the drivers, not just of growth, but of the margin profile, of profitability. You can translate the board and the CEO's objectives into very, very clear plans for your business line or function and cascade that down into the organization. And I think there are many amazing functional team leads out there who are good people managers, but at the end of the day, fail to think critically enough around how their work actually ties back to advancing the financial goals of the business. So I talk a lot about activity of the function versus productivity of the business, and the P&L command is really advancing, the financial objectives of the company in the name of driving enterprise value.
And can I just ask Cassie, because I think I wholly agree with the need for it. It's funny. I mean, certainly with some of the clients that I work with these days, I still find myself having to explain the basic differences between bookings, revenue, and cash.
I know.
And so when you've what has been your methods for success in kind of helping people get up that learning curve? And how have, finance teams, I guess, play a part in that as well? What sort of advice would you have for a finance team that needs to elevate the skill set of the other department heads?
Yeah, so absolutely. So I'll come back to your question in terms of, what the finance team can do to help. But first thing I would say is it's really on every person at the management plus level. But I would say, honestly, this cascades down even into individual contributors to take it upon themselves to educate themselves on what this looks like. And I think particularly in the era of AI, what I'm frequently telling people is you could literally go on to ChatGPT and have a conversation with it, right? Where you ask ChatGPT to explain an income statement to you, right? And ask questions and get like a real-time tutor, which is a privilege that many people, didn't have even 5 years ago as you think about these things. But all kidding aside, I think there's plenty of resources online that can help you just sort of explain some of the general mechanics, between, cash and revenue and the implications on that for businesses. One of my ultimate hacks, which gets directly at your questions, is I joke that I want to brand a national take your CFO to lunch day as sort of like a corporate holiday, because I think an easy hack for people is to build a friend in finance to help them understand their specific company's P&L and the thing that their CEO and CFO are going to be, talking most about with the board. And when I say take your CFO to lunch, I actually don't mean that literally as the CFO. What I tell people who are earlier in their careers is take the FP&A analysts to lunch, right? Take your peer at the seniority level out. And I think you guys will probably confirm that a lot of times our friends in finance aren't drowning in social invitations from their colleagues, so they'll usually do it, right? But make it upon yourself to go and ask the questions. And I've seen people run this playbook, and I think it works really well. I joke that when I was on the operating side at my last company, Sailthru, pre-acquisition, our CFO, Marty Meyer, he and I not only sat within an earshot of each other, we lived 2 blocks from each other. So when I wasn't traveling, I commuted with our CFO. And that relationship as a CRO to CFO was amazing. Now, what I think CFOs or finance teams can do is they can do broader education. So if I, stick with someone like Marty for a second, like I can remember him doing breakfast learning series for the entire company where he would go top to bottom through a SaaS P&L and explain those things. So I think it's amazing when companies invest in bringing their staff along, but I also think it's quite frankly unacceptable for employees to wait for that to happen. It's amazing when it does, but it really is just each person kind of needs to take matters into their own hands in really leveling up their own perspectives.
Yeah. Well, I guess because numbers have that sort of rather unfortunate effect of making people clam up. Like there's I think a lot of insecurity around understanding what's being talked about and being sort of au fait with the numbers. And so I think
that's
those.
Right. And they say that you have to hear something 7 times before you really process it. And I always remind people of that when it comes to more technical lessons in particular. That's totally fine, right? Listen to the recording 7 times over 7 months, right? And it will take you a while to get fluent with it. I can remember, I've worked in tech since 2006, but my early jobs in tech were more in subscription marketplace businesses than SaaS. And so the first, role I took in the world of classic B2B SaaS, that was a new set of metrics for me. It took me a while to be like really fluent and comfortable, but you have to get, you have to be willing and eager to deal with that, the new stuff. And we always say like pressure is a privilege, right? The Billie Jean King line in terms of learning these things.
Yeah. So David, just before we move to the next question, you mentioned in with the P&L Fluency that it's the number one reason that women don't get promoted from VP to C-suite. Can you elaborate upon that and really where the key steps to overcome that exist?
Yes, absolutely. So let me give a little bit of a backstory on that soundbite. So when I was still in the operating world, my last company, Sailthru, we sold into a roll-up under Insight as the private equity sponsor. And Insight hosted this amazing event in 2019 where they invited all of the C-suite women from the global portfolio together in New York for 2 days for sort of a professional development workshop around how to get on more boards and things like that. Amazing event. But when the women came together, unsurprisingly, there were far fewer women there than you would have expected given their massive reach of their portfolio. And when they threw up the obligatory pie chart of what functions were represented, the vast majority of people in the room were from HR leadership roles. And that's not throwing shade on HR, because I joke that everything is a people problem and that's a very important role. But you understand the spirit of my statement that you had fewer revenue leaders, fewer product and engineering leaders. So long story short, I was at dinner that evening with one of my board members at the time, Shelley Perry, who's been an amazing board member to me. And she said at that dinner, the number one reason more women won't make their way from VP to C is because they can't walk their way through an income statement. And when she said that, it was a major aha moment for me because one, she's right, but two, I knew she meant it both literally and figuratively. Literally, in terms of the things that we just talked about, of do you even understand if your function is above the line or below the line, right? Where are you being classified? What are the impact of the business decisions you're making on the business? But figuratively, meaning that I think people often get so stuck in their swim lanes, right? The marketing leader optimizing MQL to SQL conversion, et cetera, that they often get trapped working in the business versus working on the business. And I think that's a huge part of what she meant. That comment about women came up because we were at a women's event. I have this very fascinating position at Primary where I meet at least hundreds of executives across all functions per year on behalf of our portfolio companies. This is not just women. I will tell you, there are a number of executives that are far off the mark of where they should be on that. But that was the spirit of that statement, right? Is the literal, tying of your work to the top and bottom lines, but then the figurative, really thinking holistically around advancing the business objectives, not just the objectives of your swim lane, if that makes sense.
Yeah. Great.
What you're talking about, Cassie, is really a cultural choice for startups, right? And they need to make it early, it sounds like.
For sure. And we could have a whole other episode on this. I mean, I think so much of it for startups and growth companies comes down to the incentives. Right. I mean, you see it in the bonus plans, right, where, you're compensating people on things that are very specific to their function, irrespective of what's going on at the business at large. Right. So, the Charlie Munger line, right, of show me the incentive and I'll show you the outcome. I think that matters deeply at every stage of company.
Yeah. You also talk about first team leadership mentality. How does that connect to executives and how they should work with finance and each other?
Absolutely. So let me start by defining first team. And while I wish I could say I made this up, I did not. This is borrowed from Pat Lencioni, who's, amazing business author who wrote books like Five Dysfunctions of a Team. And the central premise of first team is that your first team or team number one is the most senior team that you sit on, not your functional swim lane or your direct reports. So if you are the CMO of a SaaS company, you have a set of direct reports that likely include a head of demand gen, head of brand, et cetera. They are not your first team. Your first team is the most senior team you sit on. So your cross-functional executive team that includes the CFO and the CTO, et cetera. And that sounds so straightforward, but people don't internalize what that means by way of behavior change. So let's stick with the CMO to give an example of what this looks like when first team thinking isn't in practice. So I unfortunately have been a witness of a board meeting where I've seen a CMO celebrate that quarter over quarter, the number of closed won opportunities that were sourced by marketing doubled, 90% of closed won ops sourced by marketing. Missing context from that slide that was present in the broader board pack is that this was presented in the context of a business that literally was shrinking. Not only did it not hit its plan, it was shrinking, and yet we have the marketing leader celebrating the fact that we have influenced more of the closed won deals, which is literally the opposite of first team thinking, right? I don't want to only pick on marketing, so I'll pick on sales for a second, right? I can remember a couple summers ago getting a 911 call from a founder because his CRO wanted to change quotas halfway through the year because they had marketing seasonality in the summer and the pipeline numbers were low. So instead of asking himself the question of, how can I spiff my team to do sales generated pipeline, heaven forbid. We're going to change the quotas, which directly impact the financial outcomes of the business, like very, very tone deaf. And so again, first team is this, you put the needs of the business over the needs of the function. So what I always say in this is, marketing can't be crushing it if the business isn't crushing it. But I can say the same thing about engineering and product and really any function, right? I can make that same statement. And where this comes back to, just advancing sort of the P&L goals, et cetera, is naming what I like to call first team metrics, right? So what are the hero metrics that really matter for the company such that everybody in the business knows that if they don't connect to that in some way, what's really the purpose, right? So I'll give you an example. If you're a support engineer and you have like 9 out of 10 customer sat on your ticket resolution, sure, that's like a reasonable absolute number. But if your company has, net retention rates that are total garbage, really that metric doesn't matter at all. And so it's really this education of what are the headline metrics that the company cares about, that the first team cares about, and how do you trickle and cascade that down into the whole organization?
I assume in there, though, there's that need to have the activity of connecting all these different metrics together to make sure, obviously, that you're focusing on the right ones, but that the definitions are kind of, a coherent whole. So you've thought about the consequences of each of them. What part in that process of really validating and making sure the definitions are what you need, where does finance play a part in that? And have you seen certain platforms or data centrics or approaches that have kind of really enabled teams to be more effective at that?
Yeah, I mean, I think this is a huge role for the finance team. And I think this comes back to the importance of annual planning first and foremost, and then revisiting, do you know what I mean? Sort of the quarterly forecast and op plan and things along those lines. And so, to your point, there are literally 1,000 different metrics that a company could be measuring. I think where the finance team really plays an important role is, at the end of the day, I primarily use this language a lot of like, what are the glass balls versus the rubber balls? Meaning, if you drop a glass ball, what happens? It shatters and it's a problem. If you drop a rubber ball, it bounces back and things are okay. I look to the finance team to sort of be the arbiter, right? Of like, what are the glass balls for the business this year, right? So, if we want to give a pragmatic example, if you're really focused on, building, free cash flow independence, and you have all of your customers paying you monthly, right? Are they really going to say, okay, this year the metric around moving to annual upfront payments is going to be more important? Like, what's the connective tissue that you need to go and do there? But I think great finance leaders sort of separate the wheat from the chaff on what matters most. Importantly, though, they do it through partnership with the functional leaders, right? So I think we've all kind of like heard the horror stories where, finance goes into a room with the CEO and then they come back with a top down, just mandate of like, we need to grow 50% next year, heretofore, this is what you need to go and do. The best operating plans marry sort of the top down, ambition with the bottoms up plan with the leaders. And so I think there's really deliberate work that goes into doing this. So what I would tell you though is that I think amazing finance leaders do a great job articulating the key assumptions and really naming the sensitivity behind them.
Yeah.
So I always deeply appreciate it, right? When a finance leader will say, okay, this is what we think we can do. By the way, it really assumes that, we're able to increase our win rate by 30% because of these reasons we feel good about. If we don't do that, here's the ramification on the plan, and here's the adjustments we're going to take accordingly. So I tend to be a big subscriber of just this like stating the assumptions behind the plan.
Yeah.
But I do think this is like a fun exercise for finance teams, but they absolutely need to be doing it in close conjunction with the respective functional leaders, because that's a really fast way to erode trust and not have healthy teams when that's not done that way.
Yeah, and I think that certainly my experience has been in putting financial models together is that those assumptions, defining them is one thing, but you need this kind of validity and check on them on a repetitive, frequent basis. And so I'm always advocating for, certainly on a month close cycle with a finance department, you're going back in, you're comparing, where did this assumption or that ratio or metric actually turn out compared to what we thought? And you've got some methodology as to how it connects to other activities. Like look for that
Yeah.
relationship. Does that relationship hold true? And I think that kind of real rigor around it is absolutely
Yeah,
essential.
I love that. And similar to you, I love like the slide that shows this is what it was last year. This is where we believe it could be this quarter, year, whatever the period is. Here's the bullets of the assumptions of how we get there.
Yep.
And then to your point, on the quarterly basis or whatever it is, here's how we're doing. And here's where we were right or wrong about those assumptions, right? So that
Exactly.
you're constantly closing the loop. I think that's a fantastic call.
Yep, exactly. That helps you revise the forecast. That then becomes much more improved because you've learned something with that comparison analysis.
Yeah, and that's
Definitely.
also a great place, where to engage the board, right? Because the board has tremendous pattern recognition across a portfolio around, what assumptions might be too ambitious, right? So, if I think about the go-to-market world for a moment, one trap I've seen companies fall into over and over again, right, is they do the bottoms-up quota capacity for the business, where they say, okay, if we need to do 10 million in bookings next year just to make it easy, and each rep has $1 million quota, and we assume 70% of them hit quota, how many reps do we need? Right now, sure, that sounds straightforward, but what that plan lacks is any plan on where the pipeline is coming from.
Yep.
And we all know that even the best sellers don't love to do their own prospecting. And so I end up seeing a lot of companies hiring AE headcount well ahead of pipeline. And then you have people come in who don't have sufficient pipeline and they're unhappy. And so that's a long-winded way of saying when you articulate those assumptions, it's just such an easy way to have a dialogue with the people at the board table to say, hey, what have you seen elsewhere and what doesn't pass the sniff test accordingly? Not to say that it can't be done, but what have, similar companies been challenged with in the past?
Yeah, I agree completely.
Cassie, I'm curious how your own financial foundation gave you an edge as you moved into marketing and revenue roles. I'm thinking that we may be able to convert now some marketers into first-team advocates.
Yeah, for sure. And so just, for background for people, I was a liberal arts major in college. I thought I was going to be an attorney until I worked for one summer and realized absolutely not. And so, at that time, they kind of said, all right, if you're a good student, you have two options for your career. You do investment banking or you do consulting. So I went to Wall Street and I was in an analyst class there. And so I look back on that experience very fondly because there's a very formalized training program with professional outside trainers who come in and you sort of get the crash course on accounting and the financial statements and valuation and everything in between. And so I always tell people, I didn't love investment banking, but I wouldn't trade that experience in terms of the running start that it allowed me to have. But I think it just allowed me to put things into context, right? Even things as simple as understanding something we hit on earlier, right? Of the cash versus revenue story. I mean, for startups, cash is king, but so often, right, we don't see people reconciling those two concepts, as early as they potentially could be. But going into how it helped me transition, it's really interesting. The first startup that I ever joined in 2006, theladders.com, was really a direct response marketing shop. And that's not really a term that's used a ton anymore. Everyone calls it growth marketing, performance marketing. But effectively what it meant was we were really good at investing money in paid marketing and acquisition and making a lot of money on the backside of it, right? With very little incremental venture capital investment or anything like that. And so when I interviewed for this job, I'll be honest with you guys, and I was totally naive. I think I conflated marketing and advertising. I didn't realize what a scientific practice really data-driven marketing could be. And, the co-founders of the Ladders had been investment bankers themselves, and they wanted to hire someone who they said, you don't have an ounce of operating experience, but you're a really good modeler, and we'll teach you everything that you need to know, because everything really was lifetime value modeling, payback assumptions, things along those lines. And so it really, those hard skills earned me the opportunity to learn how to operate, for lack of a better term, right? And then it was sort of right place, right time, and being in a company that just enjoyed explosive growth over the next 3 years that followed and allowed me to take on, more and more responsibility. But I think I'll give my time at the Ladders, which was my first job in tech, a lot of due, where I think the management team was really religious, even down to individual contributors, of emphasizing those first team metrics that I talked about and explaining the difference, right, of, our cash management versus other metrics and things like that. And it gave me an appreciation for the importance of it coming out of it. But that for me, like, because my first job in tech was very data driven, I just didn't know another way. And so with every subsequent job I've taken on, like I can remember, the first time at Sailthru, I was asked to take on professional services and implementation. I'm like, I don't know anything about that. But I'm like, I am pretty good at numbers. So if you give me a P&L and you give me a set of data, I can probably unpack a problem as to what's working here, what's not working here. And then, the number one lesson I've learned in my career is have a command for the numbers and then hire someone who's a domain expert who's way smarter than you to work for you to come and build the function. And so I think that's been a big part of my playbook over the years as well. And my value exchange to those individuals is, teach me the function, show me your way, and I'll teach you how the business gets run, right?
Yeah.
And we'll have a great reciprocal relationship.
Yep.
So was that the first time that you really structured collaboration between RevOps and finance?
You mean at the ladders?
Well, no, you said at Sailthru when you were running.
Yeah, I would say at Sailthru was really the time. Yeah, for sure. So it's interesting. Yeah, I mean, at the ladders, I was much, much earlier in my career. Do you know what I mean? So I feel like I absorbed so much from the leaders there that I carried with me as I myself, sort of grew up, the ranks. But yeah, Sailthru is where I really, I think, saw it come to life. And it's not lost on me that so much of that was a function of the caliber of people that I worked with, on that front who brought that to life. But yeah, we had great connective tissue there. And I think I was sharing with you, at one point we made the very deliberate decision to say, we actually want to move revenue operations out of the functional lanes and into finance so that it can be more of like the Switzerland neutral function. And what's interesting is in the time since, I have a lot of friends who are CFOs at large scale companies, and I know a number of them who have revenue operations in their remit. And I think invariably, when sales ops sits with sales and marketing ops sits with marketing, invariably there is going to be a lot of swim lane thinking because you're in the weekly meetings with these teams. The deepest relationships are with those individuals. And so, Sailthru was the first time I ever had access to sort of watching that in action. And I absolutely loved it. I think that strategy worked really well for us. But again, it was a function of the people who were in seat because the VP of FP&A, who ultimately owned that function for us, he was very, very deliberate around making sure that he was sitting down with the functional leaders, to be on the same page all the time. And actually, I'll tell you a funny story on this front. That VP at the time under our CFO, you guys may know him. His name is Parag Rajpal. He's been at Glia the last couple years. So Parag and I were catching up a couple weeks ago, and we realized that somehow, despite working so closely together, we didn't have each other's cell phone numbers. And we realized that it was because we worked together pre-COVID. And in the office, we would just be like at each other's desks well into the evening, like chatting, whatever it may have been. But it was like before remote work, but we were that attached at the hip that we didn't even need them. And I share that just as like a fun anecdote because I think it's what's true of the relationships that ultimately end up working.
Yeah. Just on that tendency for the different departments to kind of, in one way, it's because they don't have that external context, so they begin to rely too much, perhaps, upon the metrics that they've defined and treat those as like, if they're not actually connected to the rest, as we described already, then things have a tendency to go off in the wrong direction. Do you find there's also instances where that there's just the incentives are not set up correctly, so people kind of misrepresent, may partly not deliberately or deliberately? Do you
All the time.
Yeah, all the time, yeah.
All the time. And so, we went through this journey at Sailthru where I joined during this period of explosive growth. We hit major technical scaling challenges, like lost customer trust, and had to go through like a pretty major and gnarly sort of rebuild, stability kind of turnaround bit. So I saw kind of every flavor of that business. And the reason I'm sharing that context with you is as we embarked on that turnaround story, one of the most powerful things that we did was to say, okay, there are 3 structural things that matter most to making sure this business is actually going to generate real enterprise value for all parties involved. Number 1 is we have to grow, right? That's pretty straightforward. What are the metrics that come with that? That is things like exit ARR of the business. And we love exit ARR because it compounds all of the new logo stuff with all the install base stuff around not only churn and contraction, but expansion, cross-sell, and all that fun stuff. Number 2 is we have to regain trust with our customers. So we have to be a trusted partner to them. I'm not arguing that NPS is the perfect metric, but what I'm telling you is at that time for us, ours was in the toilet, and detractors are way louder in the market than promoters. You compete on reputation. And so we had to look at our NPS and try to fix that. And then third for us was we said for investors, we have to operate predictably and responsibly. And so for us, for a while, that was sort of a cash burn target. And over time, it ultimately evolved into an EBITDA target. And so those three big buckets were presented on an all-hands slide every month for 5 consecutive years. The numbers changed, obviously, but the framework stayed the same. But way more importantly to your question, as we said, if that's what matters most, that's how every executive needs to be paid.
Yep.
So every executive had the exact same bonus plan with the same metrics, right? Exit ARR, NPS, and then a net burn target that went into EBITDA. And you haven't seen behavioral change until you see what happens when, say, your VP of products bonus is being derived by metrics like exit ARR and NPS, right? It just changes the behavior. And I'm picking on the executive suite, but there are corollary examples for this at all levels of the organization.
Yep.
I'm a big fan of for the sales team leaders, instead of just giving them new logo or bookings target, giving them a hook on net retention, right? So that they're helping to save things on the other side or grow the accounts on the other side. But even down to, I can remember a period at Sailthru where with our account managers of the install base, for a while we were comping them on net retention, which was okay, but we had a real gross churn problem under the net retention problem. And so we said, we're not just going to pay them on net retention because they've got a couple good cross sells. We're going to bake in gross churn as its own metric. And even if we're double dipping between those two metrics, we don't care because they're going to be thinking about gross churn way more deliberately and helping the CSM team with addressing that. So I think I say this all the time. Your team will never be fully aligned if the compensation plans are not, full stop.
Yep. Totally. I'm just going to pick up on one. You mentioned it a couple of times already, but one of the metrics that I spend a lot of time working with companies to make sure that they're reporting rigorously and truthfully is on ARR. And it's got that whole thing of there's not a consistent definition of it that I think everybody accepts and uses. And there's always this tendency, I think, with sales and revenue to sort of, they want to boost numbers. Like you're coming up to the end of the quarter, like you want to show a number perhaps that's a little bit of a stretch over what it actually is. And, a lot of the work that we're doing is linking that ARR back to the absolute source of truth, the system of record, the ledger that's in the finance system. And this is why I think, just to mention tabs again, I think a platform like that really provides that reliable connection between a metric that people are using to measure the status of the business to then actually what happens in the finance back end or in the ledger, I think to me is absolutely critical. And I think it's a great development.
I couldn't agree more. And I think so much of it too is that going back to the comment I made earlier around what is the pattern recognition of being on board? We all see it. There's collections problem, there's DSO problem, and the more tooling that's put in place to just automate that stuff so that you don't have to think about it is absolutely incredible.
Yep, I agree totally.
Yep. Yeah. So now, Cassie, I'm going to ask you to put on your investor hat. When you're evaluating companies' new investments, what do you look for that tells you that the CFO is really operating in a cross-functional way?
Great. So I'm going to actually answer your question in two slightly different ways, because primary, we're writing a lead check at seed. So there's usually very little financial infrastructure in place when we invest. It's actually a huge part of our value add. We have someone on our team, Kurt Chessman, who actually helps the founders stand up their finance infrastructure. But the way I can answer your question is, excuse me, once we're in the life cycle with these companies and we're engaging at the board level and they've made the first finance hire or even slightly in advance of that, there are certainly flags that we can look for that signal that they're sort of in control of what's going on. And a few of the things that immediately come to mind there, one is that really someone in the business has command and control over all of the business metrics, not just the financial ones, right? So, we talked about the importance of ARR. Yes, that is true. But equally important to that, in my opinion, is what are what I'll call the sticky drivers of net retention, right? So sure, the net retention is 130%, but can you articulately tell me a story that customers who use certain integrations actually have an NRR of 180%, and we should be totally rethinking implementation to drive toward those behaviors? Those are the sorts of stories I'm listening for, right? It's not just the financial metrics, it's what are the leading indicators on the business side that helps us get there. Elena, who's the CFO and president at Toast, has this great analogy that I've borrowed where she talks about, the play-by-play of a baseball game versus the color commentary, and how there's a parallel in the finance function and working with the business. And I couldn't agree with that more. The financial metrics are really the play-by-play, and I'm listening for the color commentary to tell me that things are on the right path. So that's number one. Number two is just the quality of the board pack. So that example I mentioned earlier with like the tone deaf marketing slide celebrating how many leads came from marketing, even though the business like was suffering atrophy, that wouldn't happen under a strong finance leader, right? They're kind of like telling this cohesive story and they're being intellectually honest. There is no sense in telling your board what you think they want to hear, as you guys well know. And then, the only two other thing that immediately comes to mind is, delivering thoughtful forecasts. And then what we talked about earlier was very articulately outlining the assumptions and the sensitivity drivers. I love it when people do that. We talked a little bit about good formats for that earlier. That shows like great command of the business and an understanding of like what happens if we do experience sensitivity. And then the last thing, which is probably the most obvious, is like you hit plan, right?
Yeah.
Or if you have to reforecast, you hit the reforecast. There's nothing worse than sort of, the board exercise where every single quarter you have the myth, because it starts to ask a flurry of questions, not just about finance or product market fit and a lot of other matters. But I think that's a really important sort of green flag signal that we would be looking for.
Yeah. I'm just going to say, you mentioned Kurt. I just wanted to highlight Kurt Jessman's a fantastic individual. I think your companies are very lucky to have the support of him and obviously of Brian before him as well. But just on the plan, we had our prior podcast series, we interviewed, I used to work with him, Haroon Mokhtarzada from Rocket Money. And so one of the financial model we put together, he highlighted how the work that we'd done to connect, again, these metrics, the connectivity between, an assumption on how much was spent in marketing to acquire a certain type of customer, you could then have this very reliable connection to revenue that would turn up, 1 or 2 months later. And the work that we did to make sure that these things all tied together meant that when he came to the board and he would advocate, in a quarter, let's spend this much on marketing, he could almost, rely, 99% on what revenue was going to turn up the following quarter. And that, he described that sort of appearance of control and knowledge of the finance and the plan as giving him a lot of power in the boardroom, because the board's like, you've got your finger on the button, you know what's going on. And so when he said he needed to make some changes or make some decisions, like the board just tended more to follow him. Or at least like not have to try and question things. I just wonder if you've seen situations like that, would you support that kind of thing?
I love that. And yes, I mean, I think like where all of my sort of thoughts went as you were describing that is just like the rigor of cohort analysis in a lot of these forecasts, right? Where it's, hey, we're looking at the plan to hit plan. We will not have coverage, you know what I mean, to hit this number 6 months from now. What are we doing today to control for that, right? To future-proof the business. So it's funny, I always call it plan to hit plan. Kurt has a great line that I've started using. He calls it the path to the math, right? And I think really great finance leaders have strong command of the path to the math. And most importantly, they call out when it's not going to happen, right? And again, as a board member, I would way rather just know that it's not going to happen. I don't want to hear that 4 times in a row. But then you can go into triage mode, you know what I mean, around how you can at least try to soften the blow or close the gap on what's going on there. But I think that's right. I think like the really exceptional CFOs, like they just are so intimate with sort of the drivers and the risks. And it's just very, very apparent in every conversation with them. I always say it's kind of like you want to have the executives in the board meetings, right? Because it's great to, hear their narrative. But at the end of the day, if you have been a really amazing finance leader, you could get by without having those functional leaders in the room because the finance leader is so well versed on how the business activities map to the plan.
Yeah, great, a terrific point.
Yeah, Rocket Money is a great example of scale. And Cassie, you back companies like Dandy, Chief, Latch, Alma. Yeah. What did you see in their finance leadership or systems that gave you the confidence that they could execute the way they have?
Yeah, I mean, I think it's a lot of the things that we already talked about. And maybe to harp on one point, I'll talk about the quality of the board pack, right, in many of these companies. And I want to be clear, like I'm not celebrating, a good board pack a great company makes. I actually often say to the contrary, when I hear that a company is spending like 16 hours on board prep, I want to have a heart attack because I'm like, if you're spending all this time prepping for the board meeting, all it's telling me is you're actually not using any of those metrics to manage your business today. So, there's merit in ad hoc analysis, but that's the opposite of what we want. But I think that is a great accountability mechanism, right,
Yeah.
for coming together and showing sort of the strength of what's going on there. Now, related to that I think is true of all of the companies you mentioned and many more, is this emphasis on not just financial metrics, but data infrastructure to track what is going on in the business. And going back to our pal Kurt at Primary, if I were a betting woman and I asked Kurt, like, the two things that come to plague organizations as they grow and scale from a finance perspective, I think I could tell you the two things. One, because I've heard it from him directly, which is it goes back to our like classic, do people understand the different types of accounting?
Yep.
He said so early on, like founders are so excited to do customer discovery and selling that they don't worry about like being on cash-based accounting. You know what I mean? And they need to be off that like way sooner. But the second big thing I think he would say is having the instrumentation to be able to do real business intelligence and data analysis.
Yeah.
And I think particularly in an era of AI, there are so many tools that are out there, and I'm not like the best person to ask for specific vendor recommendations. But the expectation is that you can do that analysis and you can do it very nimbly, right?
Yeah.
And so I would say, if I think about the companies that have the most mature functions, it's not just about the finance command. It's that they're really telling a story with data for the entire business, and they've forced the business to prioritize making sure they have the infrastructure in place to do that really well.
Yeah, totally. And I think sort of having worked in the startup sort of sector for a number of years, one of my experience of working with companies is it often is quite difficult for finance to get access to data in the rest of the departments because it was always a very manual process. So the data was just sort of hidden somewhere. It was never sort of available. Now you've got this, the cloud APIs. Data is always much more accessible, I think, for these individual platforms. And then we have one of our sponsors, Aleph, really centralized. It actually brings all that data together into one place. And then you've got the ability to source it using Excel, visualization, dashboards, whatnot. And that, I think, having access to that data was the first critical thing. And then to build that capability to actually go in and analyze it is like the second big thing.
No, I love that. And this is kind of a tangential story, but you made me think of it. I teach this class called Storytelling with Data to current CROs and aspiring CROs with the Pavilion community, which is like this huge global community of go-to-market leaders. And in my class, I always give these concept checks with increasing degrees of difficulty, right? And I'll actually give people scenarios like, if this is your op plan bookings number next quarter, and this is your historical pipeline conversion, and this is what's in pipe, what do you need to hit plan? What's the path to the math? Now, I've been teaching this class for probably 4 years. Some of my hardest questions historically would have like a 15 to 20% solve rate of people in the class. And recently, I noticed that maybe like 65, 70% of the class was getting it correct. And I realized they were just putting it into ChatGPT, right? And they're asking the question of like, if these were my historical numbers and this is what I need to go do. So yes, there's like tooling, and to be scaled, like you need to have these systems in place, particularly for companies that are thinking about audit and public company readiness and all of that stuff. But for the functional leaders that are out there listening, I'm like, now there's really no excuse, because you can actually get help like talking through your data and scenario analysis to like flag the potential risks in your plan.
Yeah, totally. I think I imagine there's then a call for storytelling in finance. I mean, obviously there's great people out there doing it. But
it's interesting you say that, because I think, I run this program called On the Business, like working on the business for senior women in software. So all C-level and VP level women. And it's really focused on leveling up your P&L command, financial statement fluency, and first team thinking, all the fun things we talked about today. And it's open, it's limited to super senior women. We do it in New York and San Francisco, and it's a great community. It's open to any function, and every time there's a ton of finance leaders that are there. So I always say to them, why are you here? Because so much of it is like getting more fluent with the numbers. And they have great answers. They say, I'm here because I'm going to hear from a head of product or a head of CS something that's going to change my perspective on questions that I should go back and ask to my team and my executive peers. So to your point, that absolutely goes in both directions, where the operators on the non-finance side need to be more financially fluent, and then the finance leaders need to be more fluent with the realities of what's happening in the business. And that means things like, and I'm deeply appreciative that I operated for as long as I did before I started doing board work, because I do think there are some investors out there that they massively underestimate how hard it is to solve big business problems. So if you are an enterprise SaaS business with a pipeline coverage problem, you're not solving that in 30 days. Like, it's just not going away. Yeah. Now, I've been in that role, so I get it. Like, a finance person needs to get that that's not solvable over 30 days, right? If these are 6-month selling cycles or whatever it may be. So that's a long-winded way of saying, yes, I think this absolutely flows in both directions.
Yeah, totally. That's a fantastic initiative with on your business as well. So congratulations on that.
Yeah, Cassie, I think you have an amazing perspective, as we said at the beginning, because you've been an operator and now an investor and a board member. So I think you have done an amazing job here at helping us debut the Speaking C-Suite series.
I love the name. That's
great.
I'm jealous of the name. I was like, it's very, very witty.
Good, love it.
That's awesome.
Great.
Cassie Young from Primary Ventures, thanks so much for joining us today.
Thank you, guys, and congrats on the launch.
That was terrific. Thank you very much, Cassie. We'll see you soon.
And Johnny, congratulations on what's been an amazing episode. Look forward to the next installments.
Look forward to it as well.
All right. This has been Speaking C-Suite, exploring how finance leaders can become true strategic partners and why P&L Fluency and First Team are the secret weapons for cross-functional success. I'm David Hemingway. I'm the founder of the Angel Nest podcast, and we've done many episodes with Johnny at Ruled. You can check those out at theangelnest.com. Thanks for tuning in. So long until next time.
Ooh.